Meanwhile, the new inflation figures defies analyst predictions. The consumer price index, which measures inflation, increases by 11.37% year-on-year in April 2019. This is 0.12 percentage points higher than the 11.25% recorded in March. On a month-on-month basis, the headline index increased by 0.94% in April 2019. This is 0.15% rate higher than the rate recorded in March. The composite food index rose by 13.7% in April compared to 13.45% in March 2019. The rise in food index was caused by increases in prices of meat, fish, oils and fat, breads, amongst others. The consumer price index, which measures inflation, increased by 11.37%, like I said earlier, year on year. And that's run about 0.12 percentage points higher than what was recorded in March. Now, with me to look at these figures and, well, put them into perspective, I have Ayo Akinwumi. He's right here in the studio. Let's look at how these figures and what they really mean to the Nigerian on the streets for him to really understand this. Ayo, it's great to have you join us on the show.
Thank you for having me. Good afternoon.
Now, first, seeing the figures today, what do you make of it? You know, it's not what many projected. These projections went the other way. What do you think?
Yeah, thank you very much. It's a little bit points higher than what we had expected. We had thought that it would go down a little bit, but it went up marginally. Still within the range that we'll expect. I mean, you can give it just that margin of error. The population, the sample size that FSTH research takes every month is far lower than what the National Bureau of Statistics takes. They have more capacity in terms of more spending to enable them to take samples. So that's what we have at that margin of error, but still within the range of where we see inflation in lower level of double digits this year. And we had expected that we are not going to see inflation in the single digits this year, which is the target of the Central Bank of Nigeria. But going forward is just the implication of the numbers that has just been released that for me, that is most important. And again, the driver of inflation going forward. If there is no adjustment to PMS price and there is no adjustment to electricity tariff, we see inflation in lower double digit this year. But we think that there's going to be adjustment to petroleum price this year because of the drain on government revenue that is brought about by the so-called subsidy that we're having at the moment.
Okay, now, talking to the barcode now, inflation rate has been relatively, when you say it's been fluctuating, that's what was stable. That's in 2019. Let's use the word stable. At the beginning of the year in January, what we had 11.37%, and at February, 11.31%, March, 11.25%, and as we speak in April, we stand at 11.37%. Now, this came as a it was really a shock with what it comes to. Now, for instance, FSDH, which you represent, Merchant Bank, projected that the forecast of inflation was to drop to 11.23%, although the rate remained above the central bank's figure. Now, let's look at food, which is something that everybody likes to talk about, Ayo. We still have increases in meat, fish, oil, and all of that. This is almost becoming a recurrent decimal.
Okay, so if you look at the historical number, the number that was released is actually in line with historical number and seasonality effect that we are seeing in that number. Usually around this time to mark the commencement of rainy season, even though the rainy season was delayed a little bit this year, you see food prices pick a little bit through June before it becomes to drop a little bit. So the numbers we are seeing there, and if you look at the number that we published also, we alluded to the fact that we expected that food index, which account for about 51% of the CPI index, will actually go up a little bit. And I think in our report also we mentioned that the month-on-month increase will be the highest month-on-month change in the last 7 months, thereabout. and that's the same trend that we have. The only difference is that the margin of drop or the margin of increase in the headline inflation is slightly different from our own by some certain basis points. So, and that is in line with the historical trend that we're having there.
As we move on, many expect that there will be a lot of spending and also expecting that the minimum wage would be implemented both at the federal and the state level. And many believe that there will be a lot of injection of funds into the system. What effect could this have on these figures?
Okay, so when you look at the discussions at the federal level and the state level, it may mean that the impact of the new national minimum wage may be over-exaggerated in terms of the impact on the consumer prices in the country. Yes, a lot of people will say, hey, there has been an increase in minimum wage now, and therefore there are just certain consumer items, the price of certain consumer items in the market. But then we have huge amount of weak purchasing power in the country, high level of unemployment, and the fact that people, they lead to the people who are working a lot of high level of dependency on them, and so their purchasing power is a little bit depressed. And so if you have, and of course, if you look at, take for instance, in terms of payment of rent in the country, we have huge amount of default rates in the country at the moment. So, so if money increase a little bit, the impact of it on inflation may not be as much as people were thinking about, and looking at it the last time the adjustment was made, the impact will not be as much as that. Like I mentioned earlier, the major issues that we think may likely lead to high inflation, at least in the Nigerian context today, is the adjustment to the premium motor spirit, the pump price, that's PMS petrol, and then because there is a need for the federal government to do that, to adjust that price to reflect the current cost and the landing cost of that product. Government is spending huge amount of money to subsidize that, even though they say under recovery. But then the fact that it's affecting the amount of money that's going to the federation account, which is has reduced the amount of money that they distribute to people. And if you even look at the discussion around the new minimum wage implementation, they are setting up a committee to advise federal government on how to do that, advising them on how to implement it. It's an indication to show that government does not have so much money to embark on all these activities. So for us, the government needs to adjust that. If they adjust that, oil consumer price index will move up. Then the government needs to also, fix the issue with the electricity tariff to adjust it to reflect costs, so that it will attract investment into that sector to make us have stable electricity that can propel growth, economic growth, and create jobs, and then lower the unemployment that we have in the country. So those two factors locally needs to be attended to very soon, and I expect that immediately we have the swear in the new president. I mean, the president, the second time, he will need to deal with those issues and adjust it. On the international level, if you look at the discussions between the China and the U.S. now, the trade dispute, even though we have discussed it a couple of times, it's a very complex matter to address because of the way China, over the years, over the last 3 decades, had structured their economy. For them to say, oh, they're going to reduce the trade deficit between China and the U.S. is not going to happen within a short period of time. So, and that one can affect the global economy. U.S., Donald Trump has increased increased import duty on the goods from China. That also has the capability of ensuring that the price of goods that are brought from China, imported from China to U.S. go up. And then if the price of those consumer goods goes up, what will happen to inflation? It may likely go up over there. And rising inflation in the U.S., the central bank, the Federal Reserve Bank, may take a different stance to say, let's fight inflation by raising interest rates. Raising interest rates also there may likely lead to capital flight from Nigeria and another emerging market, which will have impact on interest rates here, also an exchange rate. And these are issues that may likely impact inflation. So for us, inflation, there are a lot of factors that need to be considered that may likely impact on inflation other than the adjustments, the new minimum wage implementation.
Great analysis there. Now, let's look at the forthcoming Monetary Policy Committee meeting, which is scheduled for next week, I guess. Now, with these figures out, do you see any more shift? Yes, for the first time after many months, there was a little bit of shift made. They're talking about the interest rate by 50 basis points. Now, tell us, what are we looking at as we move on for the next Monetary Policy meeting? What are your expectations?
So, looking at the economy, the Nigerian economic fundamentals, I think that Central Bank needs to maintain the current level, not to do anything. But then, if you look at this, the think through the statement that they issued, particularly the member statement on the last MPC, it may one may think that maybe the Central Bank may want to also reduce the MPR by either 50 basis points or 25 basis points. However, we have not seen the impact of the last reduction in MPR in terms of lending, stimulating credit flows to the real sector of the economy. The major beneficiary has been the federal government. Between February this year and April, the total federal government interest expenses has dropped by over 9 billion because of a drop in the yield in the fixed income market, fixed income securities in the market. The State Bank and the DMO, Debt Management Office, may be encouraged by that to say, let's lower this rate further. Now, we've seen accretion to external reserve, courtesy a lot of inflows from foreign investment that came to Nigeria to take advantage of the rising, high treasury bill yield in Nigeria, just because the Central Bank, Major Central Bank, Bank of England, European Central Bank, FOMC in the US, maintained patient approach to interest rate increase over there. And therefore, there were limited opportunities for foreign investors to take advantage of yield. So, but for us, if Central Bank is actually, there are a lot of things that the federal government needs to do to ensure that credits to the risk sector, to enable credit to flow to the risk sector. We still have any possible decline in oil price may affect exchange rates. But the thing is that if Central Bank MPC next week reduces MPR, or they reduce the CRR from the current level to enable more money flow into the financial system to lend to the real sector, if issues, development change either from the international market or local market change, one of the beauty of monetary policy is that they can easily, convey either an emergency meeting or wait till the next meeting before they unwind the issues that to change the policy again, not as sticky as what we have for the fiscal policies. Okay. But on the balance of it, we think that they should maintain rate, but they may want to say, let's reduce rate a little bit just to allow, more interest savings for the federal government.
All right, then, thank you. Finally, now, before I let you go, we've moved to the CBN. Let's get your thoughts on the reappointment of the CBN Governor, Godwin Emefiele. A lot of positives and negatives have come from this. Some policies that some say help Nigeria get out of recession and have also caused stability in the foreign exchange market. I don't know if you think along that line.
There are a lot of issues that we can say clearly that under the leadership of Mr. Godwin Emefiele, the last 5 years that he has done well, there has been stability to the foreign exchange rate. Their inflation has come down from 18% to the current level, 11.37. We have seen also additional, financial inclusion in the system. The banks are stronger. Financial system is better. Is deepening. And so we think he has done well. And of course, under his leadership, he has brought up a whole lot of intervention fund, the latest one being the creative industry. We see what is happening in agriculture, in mining. So for me, he has done well. And its reappointment will also mean that the continuity of the good work he has been doing so far and stability in the Nigerian financial market and ultimately on the economy.
Ayo Akinwumi is the Head Research, FSDH Merchant Bank. Thank you very much for joining us on Business Nigeria today.
Thank you for having me.